Hello. In this session, we are going to basically understand what are the different types of strategies, rather investment strategies available to an investor. And in fact, if you go to real marketplace, you will find that people are crazy. Rather, they use n number of strategies to make money. Final thing is that the profit should come in. Now, there is no we cannot really term any one strategy as the best or any one strategy as bad, because there are good performance in all kind of strategies, and hence some strategies might benefit some investors and others might get well with other kind of strategies. So we are I think I'm very sure that everybody would be knowing this person is called Warren Buffett. Now he is one of the best known investors in the world, and he has made all his money only by investing into stock markets. What is active and what is passive? Why do we call Warren Buffett to be a passive investor? Now, basically what we know is, when we talk about investments, stock generally performs well if it is staying for long term. So if you are an investor of this size and then you find that you actually start choosing a strategy wherein you choose to be a long term, we think, and the difference between the two strategies is, a person using this strategy is rather looking at short term benefits. He is in fact buying a stock, thinking it as a stock. That's all. It is a say item which tends to go up, tends to come down, and whenever it goes up I should make money, and whenever it comes down I should make money again. But when you talk about long term, a person will buy a stock up for absolute long term only in case he really decides that it is the company which he is buying and not a stock. He is investing in a company, and this company is going to deliver him results by way of business profits over a duration of next many years. Over here at least 5 years. Now, if you talk to Warren Buffett again, he will tell you that I buy a stock and I'm not bothered even if the exchanges are closed for next 5 years, which means he is basically buying a business and he knows that business is going to perform only over a period of time, and hence he will not be bothered to sell the stock for next many years. In fact, there are many stocks like say Coca-Cola, which Mr. Buffett is holding past 15-20 years and still is not bothered to sell. Why? The company is making money. We all drink Pepsi and Coke, and people are fond of it. As long as people are fond of it, Warren Buffett is going to keep on making money as an investor in the company. So that's the idea behind it. Now, what does active mean? If you look over here, see these people. All these people are busy talking to clients, placing orders for themselves, and they will do intraday. That is, buying in the morning and selling in the evening is called your intraday. And buying, say, within weekly, very short term, buying this week, selling next week, or even having a strategy of, again, short term, rather medium term I should say, of monthly. That is, I buy this month and tend to make money. As soon as I tend to make money, I will try to sell it off. So it could be daily, it could be weekly, or it could be monthly. One thing is very clear. These strategies are only for traders who are sure that what they are betting on is going to go right. Markets will come down, markets will go down also. So there is, markets will go down also, markets will come up also. But they are only bothered about making short-term money out of these movements. Intraday traders, I'm in the market last almost 11-12 years, and I'll tell you, I have not seen even one intraday trader who has been consistently making money. So timing the market becomes very difficult. You cannot time the market. So sometimes passive strategy works well. Now, in fact, last time I met a client, one person who said, "Sir, I am a long-term intraday trader." I'll again repeat, long-term intraday trader. Now I said, what is this long-term intraday trader? Funny. Intraday trader is a intraday trader. He says, sir, market opens at 9 o'clock in the morning. I buy between 9 o'clock and 9:30 and sell only at 3 p.m. That is just between 3 p.m. and 3:30, which is the market closing time. So I am a long-term intraday trader. How funny. So people have various kind of say mentality. They have various perceptions of making money, and hence some people, the traders who are busy in market buying and selling daily cannot be a passive investor at all. They for being say for really earning in market, you need to be patient. No other option. You have to be patient. That's all. So this is your passive strategy, and Warren Buffett is using this. There are many famous personalities, like one famous person in India is Rakesh Jhunjhunwala. In fact, if you go and Google Rakesh Jhunjhunwala name, you'll find all details about him. It seems he started his career only with rupees 5,000. Now today's date, he's holding almost stocks worth rupees 5,000 crores. So imagine rupees 5,000 becoming 5,000 crores. So this is your passive investing and active investing. Now, when we are going to advise client various products, we are going to basically ask them for asset allocation. Now, what is asset allocation? Asset allocation depends on, I will just write down over here, asset allocation. Asset allocation is nothing else but deciding based on the age of the client on how much investment should he be actually doing. Now, what is actual investment over here? I'll just choose the green color so that it becomes comfortable. Yeah. How much investment should he be actually doing? Now, if I will again, the better way for me would be, I should classify this. I'll just see if I have this slide. Otherwise, I will show you the. Sorry. Yeah. The types of investors. I can classify all the investors into various types. Maybe the first category for me would be young adult. Who is a young adult? He has just finished his college, maybe, and he has started working. He has joined a job, and he has started working. So he is quite young, single, and hence he is not going to be. He is rather earning say good amount of salary also. It could be a young adult. The second category could be newly married. The third category would be, I should say, matured adult. Matured adult who has a family, small family rather, or say he is having a family, enough, newly married, matured adult. I should say pre-retiree over here, pre-retiree, and the post-retiree. Post-retiree. Don't mind the spelling. Now, what is asset allocation? Here, when we talk about asset allocation, it depends on your goals. How long are your goals? Now, a young person might always say, I want to buy a big car after 10 years. Now, that could be a really good goal, a long-term goal, and hence it becomes possible for an advisor also to advise him. Same way, if I say, I want to buy a house within the next 5 years, it becomes my short-term goal. So investing for that is going to be difficult. But if I say I'm going to buy it for, say my aim is to buy a house in next 10 years or 15 years, my goal again becomes longer. So if the goal is longer, you can basically take higher risk. You can be investing into equities, other kind of risky product. And the asset allocation also depends on the risk. How much risk actually can you take? Now I might say I want to buy a house, but my risk appetite is zero. I cannot really handle the market volatility, and hence his risk comes down. So asset allocation depends on the risk and the age of the